Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. At the outset, a very happy new year to all of you. The focus of today's video is going to be on a NBFC stock, PNB Housing Finance. Now, the stock has been in news recently because of a buy rating by many brokers and trade analysts. Now, in this video, we will analyze the stock on fundamental as well as technical factors and which is going to help you decide whether to invest your money in this stock or not. So let's begin. Before we go on to discuss PNB Housing Finance, let us set the stage with NBFC sector. Now, non-banking financial companies have been facing a challenging environment for some time now. It is a result of regulatory tightening and mixed projections when it comes to growth for the year 2025. But all is not bad news for the sector. It may actually lead to a stable and sustainable industry in the coming years. PNB Housing Finance is a large player, is a major player in the housing finance sector, and it has been undergoing significant transformations. It is pivoting its business towards emerging and affordable housing. Now, this segment accounts for nearly 23% of its total portfolio, which is up from 18% from March 2023. Today, the stock gained nearly 3.41%, outperforming its sectoral peers by 2.15%. Now, the stock has been consistently on an upward trend, gaining nearly 8 percent in the last six trading sessions. Now, this positive momentum has caught the attention of analysts and investors alike. On 23rd of December, Motilal Oswal has issued a buy rating on this particular stock. Now they have given a target price of 1160 rupees for the coming year. Now today the stock was trading at 903 rupees, which is a good 28% jump in its price compared to current levels. Now, let us divert our attention towards fundamental analysis. We will start with the financial performance of the company. The net profit for the company for the second quarter of the current financial year 2025 stood at 471 crore rupees, which is up 22.7% year on year basis. Quite impressive. Revenue for the same period stood at 1867 crores, which was up 5.74% year on year basis. Asset quality also has significantly improved with ratios dropping to 0.9% as of September 2024. Now, asset quality is a very important matrix when it comes to housing finance companies. It tells you about the NPA levels in the company. Next, we'll check the market position and competitive landscape. PNB Housing Finance is the third largest company in this sector. The assets under management of PNB Housing Finance stand at 71,243 crore rupees as of 31st March 2024. Now, the first two companies on the list, the largest company is Bajaj Housing Finance, followed by HDFC Bank. Now, the merger of HDFC with HDFC Bank in 2023 has affected its ranking. Again, when it comes to growth momentum, the PNB Housing Finance has disbursed uh, loans to the tune of 17,583 crore rupees for the 2024 fiscal year. Now, the landscape in which the company operates is like has immense competition with banks and NBFCs, like all eyeing for the pie of the housing finance sector. What are the growth prospects of the company? Well, analysts are forecasting immense growth potential for this particular company. Earnings growth is expected to be 16.6% per annum, whereas revenue growth is expected to be 15.8% per annum. Now, PNB Housing is focusing on building a strong retail franchise with share of retail in the total AUM increasing to 97% as of 31st March 2024. Company is also expanding into affordable housing and emerging market segments for growth. Talking about the management quality, well, the CEO of PNB Housing, Girish Kousgi, has been implementing strategic initiatives. He has been driving the company towards digital transformation for ease of business, good customer experience, and operational efficiency. Also, management is now focusing on strengthening its capital position, risk management, and credit underwriting through digital transformation. What is the industry trend? Well, the industry is expanding rapidly due to urbanization and population growth, creating a significant market, untapped market for low cost housing. Again, recent regulatory changes have slowed down the unsecured lending growth. Well, it is going to benefit companies like PNB Housing. Why? Because their focus is on secured loans. Again, NBFCs are increasingly relying on the bond market for raising capital because of slowdown in direct bank funding. Next, let us look at the valuations of the company. Well, the company's PE ratio stands at 13.13 multiple as of 26th December 2024. Price to book ratio stands at 1.98 multiple as of September 2024. Now, in comparison to the industry standards, where the industry average PE ratio is at 14.16 multiple, the PE of PNB Housing Finance is comparatively lower than the industry average, suggesting it is an undervalued company in comparison to its peers. When we compare the PB ratio of the industry, the median stands at 2.86 multiple. Again, the PB ratio for PNB Housing is lower than the median, indicating potential for value in the stock. Let us focus on technical analysis. Now, the stock is currently trading above its 520 and 200-day moving average. The bullish 200-day exponential moving average occurred on 30th of December. Now, this signal has led to an average price gain of nearly 8.66% within the last 30 days, which is a good sign. Let me tell you an interesting fact about PNB Housing. Well, it has a deposit taking license, and their deposit funding constitutes to nearly 31% of their total funding mix. Now, the like this percentage is as of September 2024. What this helps them to do is it helps them to diversify funding, which provides them stability and flexibility in managing their liabilities. To conclude, let us look at some of the pros and cons for this particular stock. Well, when we'll first list down the pros, firstly, the stock has good growth potential, as I have already told you about analysts' expectations about earnings and revenues for the coming year. Their foray into affordable housing segment has given them a new lease of growth. Secondly, the asset quality of the company has been improving, and so has its credit rating. Thirdly, the company is currently trading at attractive valuations, giving it a good making it a good potential investment option. One has to check the cons. As investors, we cannot ignore the downside for a particular stock, right? So let us check what those cons are for PNB Housing. Firstly, tightening regulatory environment can affect NBFC sector, and so this company as well. Next, an economic slowdown will impact housing demand, again impacting the demand for loans. And the competitive pressure, because of the highly competitive environment that the company operates in from banks and other NBFCs, will also affect has can also impact the business of PNB Housing. So, to conclude, PNB Housing Finance presents an interesting investment opportunity given its good valuations, high growth potentials, and its foray into high yield segments. But one cannot overlook the economic downturn in the housing sector, the tighter regulatory environment, and competition. So, it is best to do your own research, seek financial advice, and align your investments with your financial goals. I hope this video has helped you understand whether the housing finance sector is a good investment opportunity in the current year, and you should foray into it by investing in PNB Housing Finance. Let me know what you have decided and whether you think this stock is a good investment option. I hope this educational video has helped you reach a decision. I would like to hear from you on this, and please like, share, and subscribe to our channel for more such educational and informative videos. Until next time, stay safe. Goodbye.